right here, when it bounced off of support, that was on May, between the 18th and the 19th. Let's just take a look here. That was the 16th and that was the 19th. So it was a Friday and a Monday. Let's see where the Dow Jones Industrial Average was on the 16th and the 19th. There's the 16th right here, and that's the 19th. The 19th is the exact day that it bounced off of that support point. At that point, we could have determined that, in fact, lower prices were coming in the market because it had touched that support point and closed above it. And that's exactly what happened to the volatility index from that point forward. So in other words, I use the volatility index as a confirmation of what I'm looking at in the markets. I see a flag pattern beginning to develop here. I see the volatility index coming down into a support point. And those two events, this flag pattern being developed, also there was a resistance point here that was extremely significant because prices declined from it. So I've got that on the price. I've got that on the VIX. To say that there's a high probability that prices were going to decline at this point is an understatement. It was extremely high probability that prices were going to decline dramatically from that point, and they did. Here we have this little flag here on prices. Here we have a little flag here on the VIX. Prices continue to go up. However, we meet this resistance point here. There's a little resistance point right here that was established here, and it was established again here. And then here on this particular day, which is this day right here, where this little tiny thin candlestick was here, it closed below that particular resistance point. Now this resistance point, let me just take a look a little bit far back, because this resistance point was not the first time it was hit. It was hit here. It was resistance here. It was somewhat of resistance here. But the more times, remember, the more times a particular price is formed as resistance, the more significant it becomes. And what happened was, when this price right here closed below that resistance line, then there was an extremely high probability that, in fact, the market was going to rally sharply. And that's what formed my opinion for a daily review that I did on, let's see, it was June 5th, and actually I had formed the opinion on June 4th that the market would rally sharply. On the morning of June 5th, I established a long call position and created a three-legged box during this time period here, during this up rally, because there was a high probability that, in fact, the market was going to rally at this point. So the volatility index, in conjunction with patterns that you can see, support and resistance, and flag patterns that you can see, continuation patterns in the market, really form a very, very strong package to be able to not predict prices, but determine the probability that a price will move in a certain direction. And that's all I'm trying to get across. Is that support and resistance points are extremely important. Identifying continuation patterns such as a flag is very, very important. And then using that information in conjunction with the volatility index, the VIX, specifically, to determine the probability of future price movements. At this point right here, once you have a large bar like that, you have to kind of wait a day or two to determine whether or not there's going to be a continuation pattern forming. So at this point, let's say this is today's market, and for me it is, but you may be watching this video in the future. So at this point, I would wait, because it's a large bar. I would wait for prices to decline slightly, If prices do not decline slightly but continue the up pattern, I would expect that it would probably once again come back down to the 16 level and test this support point. If not, if prices begin to gradually form an uptrend, just like they have here, they gradually formed an uptrend before continuing lower. They gradually formed an uptrend before continuing lower. They gradually formed an uptrend before continuing lower. Then if we had a gradually forming uptrend before, then I would feel very comfortable in the fact that the market, as far as the Dow Jones Industrial Average and the other major industries, would probably continue on its upward trend. So we'd have to see two things. We'd have to see a gradual increase in prices on the VIX going up this way. We'd have to see a gradual decreasing of prices down this way for the Dow Jones Industrial Average before the trend would actually start to continue again. As long as the prices do not break these lows here, if we have a slow gradual decline in prices here, and as long as they do not break this low, in fact, let me draw my oval in here because this is becoming a significant low here and a significant support level. Then we should be able to continue the upward trend, at least for the time being, and maybe get back up to this resistance point again. So right now it looks like there's support down here in this level. There's resistance up here, and we're kind of in this trading range. But the two of these together actually make a very firm foundation for any type of at least trading on a swing period, maybe 1 to 3 day period that you want to trade in. They're also excellent for looking at establishing iron condor positions, because once you have a very large up move like this, and possibly tomorrow if we have another very large up move, at that point it is an excellent time in which to establish an iron condor, because you'll probably get something similar to this, a gradual decline of prices after a very large upward price movement. Prices need time to consolidate after these large price movements. And those are good times to establish iron condors, because you know the prices are probably not going to move significantly for at least the next week. And during that week's time, you could generate some significant returns with iron condors. And you can also generate other types of returns using theta positive trades. And during the week that we establish our monthly trades, it's always good to know, it's always good if you have one of these large up bars or large down bars before establishing your positions, because you'll have a greater chance of sideward price movement, at least in the initial stages of establishing your monthly trade positions. So this is a very dynamic way of providing some sort of probability analysis to future price movement. The combination of actually taking a look at price movement as well as taking a look at the volatility index. Using this type of method of establishing some probabilities, you're not going to be fooled very often. I mean, every once in a while, you're going to get a flag like this where the prices just drop right through it. But once you realize that they've hit some sort of support level here and they bounce off of it, you can again, feel confident in the fact that the uptrend will continue.